Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news from all over. Firstly, in the US, household net worth grew in the March quarter to $94.8 trillion, which is a remarkable 8.3% higher than the same quarter a year ago. This comes despite household debt only rising 3.2% in the same period. Overall debt of households, businesses and government only rose 1.4%, with the government sector, both federal, state and local, managing to shrink their debt by about 3.5%, which is also quite remarkable. In Canada, they're seeing some dramatic changes in their housing markets following regulator interventions that are trying to roll back runaway rises in their house prices. Unfortunately, that is impacting new build market hard, with new house starts in Toronto down by 50%. Nationally, the fall-off is sharp as well, with new house starts in May, a traditional period of expansion, down for the second straight month and to only 195,000 units, an 8.8% fall. Still, prices are still rising, up 3.9% in May. This is what happens when your build rate falls below demand. In China, financial regulators there are facing a testing period. June is traditionally a tight month for banks because of regulatory checks, and this year lenders are grappling with an official campaign to reduce the level of borrowing as well. Wholesale funding costs and money market rates are close to the most expensive in 2 years, and the 30-day Shanghai Interbank Offer Rate has jumped 44 basis points so far this month, the worst start to a June since the severe cash shortage in 2013. Meanwhile, on the trade front, China's goods trade is in a healthy state, and the demand for exports has risen. They have a May surplus of more than $40 billion after exports rose 8.7% and far faster than analysts had expected. Imports surged even faster, up 14.8%. In Europe, the ECB effectively said there would be no more rate cuts. Separate data shows the Eurozone economy to recovering well, and it's at its fastest rate in 2 years. But the ECB said inflation looks to remain well contained, so it will still pump out the QE cash into their banking system. Currently, that QE level is just on 1.9 trillion euros and grows by 80 billion euros a month. In Australia, there is growing nervousness about the way China is trying to influence the country by covert and sometimes very crude means. Efforts to shut down criticism of China are apparently rampant, and the key target is the Chinese expat community. It's a heavy-handed projection of power that has Canberra worried. In New York, the US Treasury 10-year yield is higher at 2.19%. The price of oil is lower again today, with the US crude benchmark now just over $45.50 a barrel, while the Brent benchmark is now just over $47.50 a barrel. The price of gold is lower as well, and is now at $1,279 an ounce, down another $6. But the Kiwi dollar is up and is now at 72.1 US cents. On the cross rates, we're at 95.6 Aussie cents and 64.4 euro cents. The TWI is now at 76.3. This is a 4% rise in a month and a 6% rise against the greenback. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.